American natural gas futures are experiencing a modest uptick, driven by a frosty cold shot into the U.S. this weekend for strong demand. Nevertheless, the end of February into the start of March trended warmer the past several days as a warmer versus normal ridge set up over most of the central and eastern part of the U.S., as shown in the image. This will help increase surpluses to nearer over 450 billion cubic feet, which is quite bearish and has aided strong selling this week. Presently, prices are close to almost a four-year low, with particular attention on projected production shifts for the year 2024. Major gas producers like Antero Resources and Comstock Resources are strategizing production cuts. Antero anticipates a 3% decrease in output for 2024, alongside a substantial 26% reduction in its drilling and completion budget. This entails scaling down the number of active rigs and completion crews. Similarly, Comstock has declared a reduction in gas drilling activities. Meanwhile, this year may bring some surprises for the natural gas market, as the EU declared it has no interest in extending Ukraine transit contract for Russian gas. This action, coupled with President Biden's recent moratorium on approvals for both pending and forthcoming LNG projects, along with restricted gas supply from Qatar, could strain the EU gas market and potentially trigger a surge in gas prices, akin to the rally witnessed in 2022. On Friday, it seems that nat gas has shed its bearish sentiment, and the outlook may brighten as several significant producers prepare to implement production cuts. From a daily technical perspective, the optimal scenario involves a session with a lower low compared to the previous one, followed by a higher closing price. Considering the prolonged downward movement in both price and duration, a validation of this chart pattern might spark a significant counter-trend rally driven by short covering. Furthermore, should we continue to observe additional news regarding production and rig cuts next week, the counter-trend rally will likely intensify, paving the way towards the $2 target. Moving forward, it appears that gas has effectively protected the $1.60 support, and if it can sustain its position above $1.65, the next hurdle will likely be at $1.76, followed by the $1.86 target. This implies the potential for upward momentum, aiming to establish the $2 level as a new target. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.